how do we exercise our options?
Okay, so how do we exercise the option? Generally, and the technicalities, usually the options are set up with a company to execute through a brokerage firm.
Okay.
E-Trade is very common. Schwab does some work for folks. JP Morgan, Morgan Stanley, so on and so forth. But ultimately, the optionee, assuming they're not restricted from doing any exercises, because they're subject to trading windows, which we'll talk about later, basically says, I would like to exercise my option. And from a very, very fundamental point of view, what they need to do is they need to pay the purchase price. So at $5 a share times 5,000 shares, they need to come up with $25,000 to buy the stock. And then that's going to create a tax event. And the tax event depends on the type of option, but fundamentally, they're buying the option, and then they receive the stock.
Right. And
then they can do something with that stock.
Okay. And do they have a choice over what brokerage, or is it it's whatever brokerage?
It's usually the one selected by the company in that case, or with the company directly.
Okay. So I can, at the time I'm going to exercise it, I'm going to have to pay the money right there.
Yes, indeed.
And so there's several strategies, and you want to share with us how those different strategies are.
Sure. So common ways to actually exercise the option is to come up with the cash, write a check to the company to pay for the exercise, and in the case of a non-qualified stock option, you're going to create a tax event at the time of exercise. And we'll talk about this in a bit, but essentially the difference between the strike price and the exercise price is taxed as compensation income. So in my example of GMZ Company, where Joe exercises 5,000 options of a non-qualified stock option, then that $25,000 bargain element is like a $25,000 paycheck. And the company is required to withhold all the payroll taxes, so federal income tax, state income tax, Social Security if you haven't exceeded the thresholds for the year, Medicare tax, so on and so forth, and send that off to the Treasury. And unfortunately, the Treasury won't accept stock from the company, so unless there's a way of the company having cash to cover those payroll taxes on behalf of the employee, then the employee, Joe, is going to have to write the check for the payroll taxes and give that to the company along with the payment for the stock.
So this is under the scenario where, like we're talking about one of the options, one of the ways to do this is if I exercise my options and I receive the stock and I just want to hold on to the stock.
Right.
So that's the exercise and hold method. But the drawback on that, you're saying, is that if I've got the stock, I better have other cash to pay all those taxes that are going to be due on it at the same time.
Right. That's
okay.
right.
And then another one is the exercise and sell to cover.
Right. So companies generally realize that the employee might not be in a position to write a large check to cover the cost of exercise. So what they will often arrange is for a process called sell to cover, which is an immediate sale of enough stock so that the proceeds cover the exercise price and the payroll taxes.
Right.
And then the employee, Joe, gets to keep the remaining stock. And it's kind of important and useful to note that Joe's basis in this stock, in the case of a non-qualified stock option, so I'll use that disclaimer.
Oh, here we go.
is the exercise price, not the strike price.
Right.
So basically, Joe has received a paycheck. In our example, he's received it in stock, and that stock has basis, which is the exercise price.
Right. And we're going to talk about that more when we talk about non-qualified stock options.
We will talk about that in intricate detail.
Right. And then another option, of course, another strategy people can do.
Is that a play on words?
I was trying to unconfuse things. So, is if I just want my cash right then, I can exercise and sell all of it. And so.
Yeah, a very common strategy, especially with non-qualified stock options, is to do a exercise and simultaneous sale. So it's basically Joe saying, exercise these options, immediately sell all of the stock, withhold money from those proceeds to cover the cost of exercise and the payroll taxes, and give me the money.
Right, and then you just let me have the money. I don't need to hold, $25,000 worth of, or $50,000 worth of GMZ stock at this point in my portfolio.
I would prefer to have my paycheck in cash. Thank you very much.
Right. Though we think GMZ has growth potential.